Okay, excellent. So good evening, everybody, and welcome to this FX Street webinar today, the special day for scalping. In today's webinar, we're going to talk about scalping for profit. So I'm going to give you the basics of the system that I use every day to scalp profits from the Forex markets. Now, for many of you who already know me, you'll see that the system isn't too dissimilar to other systems I've shown you guys. So I like to scalp for the most part in the direction of the trend. But really, I'm going to talk to you about the mindset as well as the setups to be able to make money consistently in these markets. Does that sound like a plan? So very quickly, I'll give you a little bit about myself. My name's Alex Ong. I run a website called Traders Corner with my brother. We've been trading the markets for nearly 10 years now, so quite a while. We've co-authored many articles together. We've written strategy manuals, trading coaches, all of that kind of good stuff. So basically, as well as trading ourselves, we do a lot to try and teach people how to make consistent profits in the market. And that's what we're going to do today. We're going to give you a system that's very, very powerful, very effective, and will help you start making money scalping. Before I get started, can I just have a quick round the room and see how many of you actually do scalp the FX markets? How many of you are quite short-term and make? So who here scalps already? Can you all still hear me? Every day you're trying to scalp. Excellent. Okay, so this first slide here is Scalping 101. I'm going to talk about some of the things that you need to think about when you're scalping, okay? So first of all, it's difficult, but it's very profitable. Now, the reason that I say it's difficult is that it requires a great deal of time and fast reactions. Okay, so the setups are the same setups you're going to see whether you're trading a short-term chart, a long-term chart, or whatever it is that you're trading. But ultimately, the main difference with scalping is that you have a lot less time to think about things. Okay, so you're going to be in and out of the market in a matter of minutes, sometimes even seconds, if the markets move that quickly. All right. But the great thing to do with scalping is potentially you can trade with a small bank, but you can make large returns. Now, this is a double-edged sword, right? So even though um, you can make large returns from a small bank, you can also destroy a small bank very, very quickly because you're going to be in and out of the market very, very often. So that's something you need to keep in mind when you're doing this. Now, the key to scalping success, from my personal opinion, is not to be married to any particular trade or trade idea and primarily follow the price action because we're too close to the markets when we're scalping to be able to look at the longer term fundamentals. So I know that everybody says don't be married to a trade or a trade idea and all of that kind of good stuff, which is correct, which, whether you're trading longer term or shorter term or whatever it is that you're trading, but it particularly applies to scalping because, well, for when I'm scalping anyway, ultimately I'm looking to what I'm watching the price action, okay, and I'm reacting to what the price is saying. I'm not really too bothered with what the longer term fundamentals are saying because I'm looking to extract lots of little bits of profit from the market, and I'm looking to do that often. All right. What do you mean trade a small bank? Okay, basically, sorry, a small bank, I mean sort of like you can trade with a small account. So you don't have to have a considerably large account to make decent profits. That's what I mean. All right. So I'm going to give you the setup or the chart setup and the trades that we take for a particular system that I've been trading now for a good little while. It's a bit of an evolution on some of the range bar trading that I've been doing. Really is I did it in a bid to smooth the price action. So as you all know, or for many of you that have been following me for a long time, you know that I like range bars, right? The problem with that, as of late, over the past few months in particular, is that ultimately the ranges have been quite narrow. So even the range charts have been getting a little untidy of late. So, in a bid to smooth price action, which is what I like to do because it enables me to see the markets better, I've added a few little changes to my charts. Now, the time frame is the time frame of your choice. So if you're more comfortable on a 1 minute chart, 5 minute chart, a 3 range chart, a 4 range chart, an 8 range chart, whatever it is that you like, that's completely up to you. That's your preference. Now, the indicators that you're going to need Henkei candles. Okay, now you can apply these even over a range chart, so it doesn't just have to be over time-based charts. So Henkei candles and 3 moving averages. Now, I use currently the 25, the 55, and the 100 exponential moving averages. Is everybody clear on that? Yes? Good. Okay, so that's your key. That's how you set up your charts. Quite straightforward, right? So there's not too much to it. It's more in looking at the price action and the trade setups. So the trade setups, we have a number of trade setups, enables us to trade in any market condition. Now, the key with scalping is that, you can't, well, you can to an extent just trade one particular setup, but, the markets, they change every day. So you are going to have ranging days. You're going to have trending days. You're going to have a whole manner of different days. And if you're going to be sat in front of your screens all the time to stop you from taking stupid trades, you need to have an arsenal of a few different setups you can trade. So one for range trades, one for trending conditions, something for larger pullbacks. And we've got all of those setups here in this particular system. Gus banks, not heard of Heikin candles. Okay, well, they're basically candles that smooth the price action quite a bit, to be honest with you. As Max said, if you do a quick Google search, you'll find plenty of info out there on Heikin candles. All right. So we have just the one indicator, and the rest of the trading is based off of price action. All right. Now you've got to remember, when you are scalping, all right, though a positive risk reward is nice to have, the main aim is to have a high strike rate. Okay, so scalping, whereas if you're trading a longer term chart, like a 4-hour chart or something like that, you can afford to have, a lower risk, you can have a lower strike rate and a higher risk reward. When you're scalping, because you've got the spreads in your way, so you need to really have quite a high strike rate. Otherwise, you'll find if you're taking lots of little trades which are stopping you out, and hence having a lower strike rate, you're going to find that the spreads are going to eat into your profits, even though you may be quite profitable on the trades that you take. All right. The indicators, Kevin, are the Heikin candles, the 25, the 55, and the 100 exponential moving average. Okay. So yeah, so the key with scalping is to aim to have a high strike rate. We're in and out of the markets very, very often. We can be in and out of the markets sometimes even 5-6 times within a morning session. Sometimes more, sometimes, none at all, but it's high frequency trading. You're going to have a lot of small winners, lots of break-even trades. You're going to have a few small losses, but under no circumstances, when you are scalping, can you afford to take a large loss. There will be the odd big winner, but scalping is more about little bites of the cherry and often. Yeah, we'll get to those candles in a minute. So are you all clear on that? All right, the key to scalping, 2 things you need to remember here. First of all, it's about a high strike rate. And secondly, it's about making sure that you do not take big losses. No matter what happens, when you are scalping, because you aren't taking huge winners, you cannot afford to take a large loss. If you do that, then you're going to cause yourselves a lot of issues, all right? And you will not be profitable. So you're going to have lots of small winners. You're going to move your stop to break even quite quickly. You'll have the odd sort of, you'll have the, what am I starting to think about here? The odd big winner, but for the most part, sorry, I've got children in the background. Yeah, but for the most part, you're going to have lots of small winners, and that's the way scalping works. So, to our trade setups. Okay, we've got the first trade setup is our core trade setup. Hold on. So we do not have to violate the rule. Do not let a winner become a loser, even though the trade is in 2 pips of profits. Yeah, I don't know that I understand what you're saying there. You do not have to violate the rule. No, you never violate the rule. You never let a winner become a loser. Okay, so our trade setups. The first one is the momentum play. All right, now this is the core setup. So it's a with the trend trade. All right, you're scalping the momentum. So what we're looking to do is when there's a move that's taking place, we're looking to get in on that move and just take little bites of the cherry, as I keep saying. The keys to this, first of all, the exponential moving averages. Hold on. Do I avoid news on scalp? No, not always. So for these momentum plays here, you can definitely trade the news. You have to be very quick, and as much as it can make you a lot of money, it can burn you as well. All right. So hello, hello, can you hear me? So exponential moving average, 25 above the 55, 55 above the 100. That is your permission to trade long only. Okay. If you're looking for short opportunities, the 25 needs to be below the 55 and the 55 needs to be below the 100. That means that you're looking for short setups. Now, what we're waiting for, and this is the key here, is you're waiting for momentum. Okay, you're waiting for a momentum move through a high or a low, and then you're waiting for a pause or a pullback in the price action. And that's very, very important because if you're not breaking out to highs or lows, then you're in a range and you're looking for a different type of setup. Does that make sense to you all? Does that make sense? Yeah? Okay, so let's take a look at what that looks like. This here is a chart, and these are momentum plays here. So as you can see, the markets are breaking out to new lows constantly. And every time the market breaks out to new low, we're then looking for the pullback. So the market here has broken out to new low, pullback, and our entry trigger, don't worry about what's on the bottom of the chart here, but the entry trigger is you're looking for the first strong candle in the direction of the trend. Does that make sense? So you're not looking for a doji candle. If you get a doji candle at the top there, you wouldn't be entering on that trade there. You're looking for a strong candle in the direction of the trend. So this is a momentum play here. The market breaks through the lows. This here is a 3 range chart. This isn't a 1 minute chart. Okay, I'll get to stop losses in a second. We haven't covered the setups yet, so we will get to stop losses in just a tick. The chart in front of you is a 3 range chart. So as you can see, these are high Kanashi candles. So you can see that the price action is extremely smooth. And what we're waiting for is the market to break through the lows of the candles, give us a nice pullback as we've got here. Once we get that pullback, then we're looking for a strong candle in the direction of the trend. So direction of the trend is the direction of the momentum. So i.e., if we're looking for a short as we are on this chart here, you're looking for a strong candle, this one over here, to get you into the trade. You then place your stop behind the high, the swing high over there. The time frame is completely up to you. Okay, so it's whatever you're comfortable with. All of the strategies that we teach, they aren't for a defined time frame. It's really what you're comfortable with. Because at the end of the day, a chart is a chart, whether it be a 1 minute chart, a 5 minute chart, an hour chart. The only difference is your reactions have to be a lot quicker. Does that make sense? Is that okay, Ari? Okay. So as I said, let's go through these trade setups here. The moving averages are pointing down. So the 25 is below the 55, the 55 is below the 100. We get the market breakthrough with some momentum there, break through the lows, and we get our first pullback over here. This is where we're looking to enter the market. Okay. So this is where we're looking to enter the market right there. We get in on a short there, we place our stop above the highs. Then all we're really looking for is the markets to come down towards the lows again. Once it gets down towards the lows, then we need to be looking to either move our stop to break even or take the trade off altogether. Now on this chart here, what that means is that I've got sort of like a seven pip stop loss, and potentially I'm looking for a 7 pip profit target. 7 to 10 pips. right? So as you can see, the risk reward isn't huge there. Sometimes it's even negative. But we're looking to take lots of bites of the cherry and off them. You can see here that this is a period of from 8 o'clock in the morning through to 10 o'clock in the morning. So over a period of 2 hours there, you potentially got 3, possibly 4 setups that you could look to take. Does that make sense to you? Do you see what the momentum play is all about? Okay, I'm going to say it again one more time. The exponential moving averages are the 25, the 55, and the 100. Okay, 25, 55, and 100. No, the entry is not always going to be at the 55 moving average. We're just looking for a nice pullback. So this pullback here of like 1 or 2 candles doesn't count. You're looking for a pullback towards the moving averages. So as long as it hits the 25 moving average, it doesn't matter where it is within this zone here, anywhere within this zone, and you can take the trade. Heikin-Ashi candles are standard on Ninja Trader. So is everybody happy with the momentum play there? Does anybody have any questions on the momentum play? So we've got 2 other trade setups that I want to talk about. So I don't want to dwell too much on any one particular setup. What happens if the trade goes 3 pips and then it begins to reverse? No, not necessarily just the 3 pips. You can do if you want. What I look for is looking at the candles here. So if it just the 3 pip could reverse in one of these candles here, what I'm looking at is the overall price action. So in reality, in this trade here, I potentially would have been out of that at break even, because you can see that the market starts to go with me, then it starts to mess about, and I potentially would have been out of this one here at break even. This one over here, you can see that the market then just goes directly with you. So, you know, you wouldn't have had a chance to move to break even. You would have been booking profits at that point there. Can you share how you use well, I'm not sure I follow the question. No 2 trades are the same. What happens if you... Yeah, exactly. So it's about price action. This is a thing with scalping. I wouldn't recommend this to people that are new to trading. It does take a bit of skill, because you do need to be able to read the markets. You develop a bit of a feel for the markets. It's not something that someone's just come to trading can do successfully. You may do it because you're lucky, but in the long run, you will knock yourself out of the game. I'm sorry to say that, but it is the way it is. Okay. So the next type of setup that we use is it's a range trade. So it's for those days when the markets aren't moving anywhere and you're fading a failed breakout. Okay, so what you're looking for is, first of all, you're looking for a defined range. Okay, so you can see the market's kind of oscillating in a range. Then you're looking for a directional move to a predefined level of support or resistance. Now, the reason I'm saying that we need a directional move is that we need it to be evident that the market is failing to break out. We can't just take those moves where it's, you know, the market's just kind of meandering up to a particular level, then it breaks out a bit, comes back, and then breaks out. It's very, very important that we're looking for a directional move up to these points. Once we get the directional move, then we can look to be fading these particular points. Okay, so our next setup is for when the markets are ranging, so the moving averages are not lined up, and ultimately you're looking for a predefined range. So looking at this chart here, okay, you can see that the market, if we say that we've come to it around here, all right, so we've defined our support and resistance levels here. This would be our first trade there. So we've got a directional move to that level, and then the market quite evidently turns around at this level and gives us a strong candle in the opposite direction. So the entry is still the same. We're looking for strong candles. Okay, opposite to the color that it just came from. So if this move here was the market was selling off, so we have lots of red candles. To get into the market, we want a strong green candle. So this one over here indicates to us that this level was being rejected. Okay. The market then rallies up to that level. And again, we can see we've got a predefined level here. So we know where we're looking for the market to turn around. That when the market gets up to that level, you wait for a candle in the opposite direction. You place your stop above the high or the low, and you look to trade it for a few pips. Now, note that this isn't a huge range here. This is from 16555 up to 16575. So this is a 20 pip range. You're not going to be getting huge profits. You're not looking for 20, 30, 40 pip move. You're looking for 5, 10, and maybe 15 pips if you're lucky. Does that make sense? So for scalping, would you be trading bigger lot sizes? Well, this is an interesting question, Jeremy. Me personally, yes, the lot sizes are a little bit bigger. But what you've got to take into account, Jeremy, is that you could be in and out of 5 or 6 trades in a morning, right? So what I prefer to go with is I have sort of like a daily stop loss, all right? So I'll be risking 2% of my account in any one day. If I hit that, then I'm closing up for the day. That's it. Good night. Thank you very much. Now I will have, which ultimately means, you know, I'm going to have a series of smaller positions, which will equal my 2% stop loss. So it won't be, whereas, for example, so yes, you'll be trading bigger lots, but you won't be trading, you know, 2% risk per trade. Does that make sense? Would I hedge? No, you don't have time, Ramesh. You don't have time to hedge against any given trade. You're literally in and out so very quickly, you wouldn't have time to hedge against it. Yes, you must have a very small spread. So ultimately, you're only trading pairs where you have a 1 pip spread or lower. All right. So that for me are things like the euro dollar, pound dollar, euro Aussie, dollar yen, euro yen. Those sorts of pairs there, they have a very low spread. You can't scalp if you've got a spread of, you know, 2, 3 pips. It just doesn't make any sense. So if that's the spread that you've got, unfortunately, you cannot do this. Yeah, exactly. Okay, so are we clear on the breakout fade? Does this make sense to you? Excellent. So now we will come to our trend line bounce. Now, our trend line bounce is a lot like the momentum play. The difference with the trend line bounce, okay, is it's a bit more of an advanced setup because you're willing to accept more of a pullback. So with the breakout, with the momentum play, you're looking for the lows to always be broken or the highs to always be broken in an uptrend. With a trend line bounce, that's not always going to be the case. You may get sort of like a few higher highs into your resistance trend line, and that's fine because what you're looking to do here is you're looking at the overall market. So with the momentum play, we're looking to take advantage of the momentum there for that particular move. With the trend line bounce, we're taking a little bit of a step back with our trade and taking well, I say a longer term position. It's not hugely longer term, but you're taking a little bit more of a longer term perspective. Does that make sense? Now, the rules for this, all right, is ultimately you need to have a trend line in place, and then you're looking for a directional move to the predefined trend line. Now, notice with all of the rules here, they're all about directional moves. We're not looking to get into markets where it's just kind of meandering and going nowhere. We're looking for moves that have direction to it. So taking a look at this chart here, you can see that the market's going up. This trend line starts back there. When the market comes down, it's broken through all of the moving averages. This is why it's more of an advanced setup, but it's come back to this trend line here. So we don't have a great deal of momentum with this trade. In fact, you've probably got more going against it than we do going with it. But because this is a longer term trend line and we are expecting some sort of a reaction, we would be looking to get in here on the bounce off of the trend line. Now, we aren't necessarily looking to trade it all the way up to the high. So remember, we're looking for sort of 10 pips for a trade, happy days. If we're getting, 5 to 10 pips a trade and our stop loss is roughly around 7 pips, 6, 7 pips, then you're going to be making money. Okay. So with the trend line bounce trade, we're looking to have a predefined trend line in place. Once we've got that trend line there, we can then look to take the trade from it. So the market here, trend line starts back there, comes down. So now we've got 2 touch points at that point there. That's enough for us to identify trend line. The market then moves away. It comes back again. And when it comes back to this trend line here, you can see that literally almost pit perfect. It bounces off of this trend line. We're then looking for a strong candle in the direction that we want to trade. So this would be the first candle here, the one that my cursor is hovering over right there. We would then be looking to get involved in that trade there with our stop below the lows and trade it for 10-ish pips. You can combine this one with the first one. Yeah, but John, you see, if you're starting to scale into trades, you're going to have a larger stop loss, which means you're going to be skewing your risk reward. Okay, now if you start doing that, you're starting to make excuses for not wanting to get out of a trade. Does that make any sense? So I would treat each of the setups, treat them as individual setups. Don't try and combine the 2 setups. Otherwise, you start to skew your risk reward. Yes, Jeremy, there is a difference between Heikin Ashi and normal candles. Heikin Ashi, they smooth the price action. So with normal candles, you may see red, green, green, red, red, green, green, green. Here, it keeps you in the trade in the direction of the trend. So it helps you to identify the trend. It helps you to identify where the overall market is going a lot easier. That's why I prefer it. Does that make sense, Stephen and Jeremy? Time frame is completely up to you. Time frame, I'll let you decide what you're most comfortable with. The charts that I have in front of you here are 3 range charts. So they're very, very, very quick charts. You know, I can be in and out of a trade in a matter of minutes, sometimes even less than a minute, and I'll be in and out of a trade. What's the best time of day for scalping? Generally speaking, I scalp between 8 a.m. in the morning and 11 a.m. UK time, and then 1 p.m. to 4 p.m. How many? We've mentioned it a few times. There are no indicators here. For this particular system, you just need the moving average and the Heikin Ashi candles, and you can trade this system. Does that make sense? The below one, that's something that we give to our members, so it really wouldn't be fair for me to broadcast this on air to everybody for free. It's just not fair on them as they spend money on this, I'm afraid. No, it's not a secret indicator, but it's something that gives us a little bit of extra confirmation for getting into these trades here. So it's a standard indicator, okay? But as I said, it's something that we talk to our members about, so it really wouldn't be fair of me to broadcast that here. I mean, they're similar in the fact that you have bodies and wicks and all of that, David, but they're different in the way they're calculated. Okay, so are you guys all okay with the setup there? So you understand the momentum play, the breakout fade, and the trend line bounce. Yeah? Now we will open up the floor for, we've got about 10 minutes left of questions and answers. Ultimately, what I wanted to show you in this webinar here, as I said, is scalping for profits. This is a very real system that you can take to the markets tomorrow and start making money from it. All right. This isn't like a whole heap of theory that you can't use. This is something that I use every single day. It's now my favorite system. I use it in conjunction with the range chart. So I overlay the Henkai Ashi candles on range charts, and it's improved my results a great deal. So yeah, this is a very real system that you can use every single day of your lives now. The only thing is as I said earlier, it does take skill when scalping because you're in and out of the markets very, very quickly. All MT4 has these candles. I'm not sure, David. I'm not sure if they do or have those candles. I'm certain you can get an indicator for it. Which pair is good for scalping? When you start off, K-Chan, I'd start with the euro dollar, the pound dollar, possibly the euro yen and the pound yen. Please can you just slide with the rules for the second method. Which one was that? The breakout fade, Jeremy? Yes, you can trade this with chart patterns if you want. Do you recommend any risk reward? No. There's Helmy. It's about scalping is very much about feel for the markets. Sorry, just trying to see what questions we have here. Presumably, we need low spreads. Yes, you need very, very low spreads. I use FXCM personally. I've also been looking at Duke's copy for some of our members because with FXCM, we get low spreads, but you need quite a lot of money in your account to get the low spreads. I believe Duke's copy can give you lower spreads, and you don't need to have as large an account. No, it's not there. It's just strong concentration, Truck. There isn't an alert. When you're scalping, this isn't a set and forget type thing. This is you sat in front of the screens and getting a feel for the markets. That's what scalping's about. If you're looking to set and forget and to walk away from it, that's fine too. But then you're not looking to scalp. You'd be looking to more to like swing or position trade. How do you avoid slippage? In all honesty, you can't. If you're in a fast-moving market, there will be times when you get a little bit of slippage. Unfortunately, I haven't experienced too much of it. I don't know if I'm lucky or whatever, but generally speaking, the price I execute at is the price I get for the most part. Where can you get 1 pip spreads? If it depends on the size of your account. So if you've got 50,000 or above, then FXCM will give you low spreads. If you've got below that, then Duke's copy, I believe, will give you low spreads. Thank you, Mac. I don't personally use fibs. But you can do if you want. Osman, FXM has a high spread. Yeah, 2.6. That sounds about right, Osman. But we have something known as an active trader account. And for those accounts there, I don't know what it is now, but when we signed up, you need $50,000 or above to be able to maintain an active trader account. And then you get very, very low spreads. And if you drop me a line, drop me an email and I'll give you all of the information on it. My email is, I'll type it in here. I honestly don't know, Manoy. I haven't looked into them in that amount of detail. When am I coming to Singapore? I love Singapore. It's one of my favorite places in the world. I spent a lot of time there as a little boy, obviously, being half. Yeah, that's fine. As long as you get low spreads, Remy, then you can scalp with anyone. It's about making sure that your cost of business is low. Ultimately, the message I want to get across in this webinar here is that scalping is something that once you get the hang of it is a very, very rewarding way to trade. Okay. It's my favorite way to trade. My brother, if any of you know him, he prefers trading longer term charts. But for me, that just doesn't work. I prefer to be in and out, in and out. So scalping is my favorite way to trade. I don't have a problem with that. I don't know how I would get it across to you, David. I'd have to speak to FX Street about that. Am I short on the euro long term? I would, for me personally, from the charts I trade, I honestly don't have a clue where the euro is going. If you want more of a fundamental view, then I can get my brother. Well, I can't get him online here, but at some point I'll get him to write a blog post on it if you like, and he'll give you all of the reasons to be long or short. But from my personal perspective, I'm neutral. I'm not anything in the euro. I'm profitable scalping all the time. What do you mean by all the time? I take losses. I have days where I'm down on the day. I have weeks where I'm down on the week. But for the most part, yeah. I mean, overall, I'm profitable. But as with any trading, I'm not going to sit here and lie to you and say that you're going to be right 99.999% of the time. It's just not the way it works. I have days when it seems like I can't even buy a winner. But then I have days when I don't take a single loss, so it swings and roundabouts. Yep, we do have a website, Bernard. It's Traders Corner. So www.traderscorneronline.com. And yes, we do live training. We do online boot camp. So over a weekend, we'll take you through all of our systems and how they work and all of that kind of good stuff. Yeah, the spread betting companies have low spreads, um, but hardly anybody who trades with them is profitable. I think that's more a function of the people trading rather than the spread betting companies. So, how did you guys find this? Does this seem like a system that you are going to be able to use? Is this something you're going to want to give a try? If you have any questions about it, our email is up there. Please, feel free to send us an email, um, and I'll do everything I can to answer all of your questions. A little testing, and you never know. It's a very good system. The key to scalping is remembering that you're scalping. That's one of the key breakthroughs for myself anyway, is to understand what you're trying to achieve. So don't start off the day scalping and think, oh, I'm going to try and let this run into a longer term trade. And by the same token, don't start off in a long term trade. And then when you see a little bit of profit, say, oh, I'm going to just scalp some profits here. The key to successful trading, okay, and all of you, please listen to this. The key to successful trading is understanding what you are doing. All right. So understanding your targets and sticking to them. If you're scalping, you're looking for 5, 10, maybe 15 pips worth of profit. That's fine. Okay. But don't get into a trade and see that you're in 10 pips worth of profit and think, oh, I might be able to get 60 pips on this. Okay. Because that wasn't your intention when you got into the trade. And if you start to alter things once you're in the trade, that's where you go wrong. So you need to understand the chart that you're trading and trade accordingly. Does that make sense to you all? Excellent. Any other questions? Exactly. Why don't I use minute charts? I just find that range charts are smoother. I've been using them for years now, but if you look at some of my webinars with FX Street going back over, 2, 3, 4 years, I've just always liked range charts. There's something that worked for me and I make money with them, so why change, right? Personally, no, I don't use Renko charts. Are there any other questions? Thick chart setting. How many thicks on your? Well, sorry, I don't understand. Truck. Range bars and bagels. Ray, how are you? You okay? Do you have bagels today? Is scalping scalable? Can you increase your trade size to hundreds of lots once you have a successful strategy? Personally, I've never tried Manoi, but maybe. I don't trade hundreds of lots. I'm just not that high a roller. Excited to try it out tomorrow. Good, Stephen. If you have any questions, drop me an email and I'll be happy enough to talk it through with you if you've got any questions about the system. Has this webinar been recorded? I believe so. I believe it will be up on FX Street for you to take a look at. Aha, FX Trade. Now that would be telling. Generally, I scalp for 5 to 10 pips at a time. Okay, well, I guess if there are no more questions, we are just coming up to on average, how many trades you take per day. It can be anywhere from none, Joan, to, 8, 9, 10 trades in a day. But average, probably 2 to 4 trades a day. What lot size, how many pips is good for you to count? 5 to 10 pips. What lot size? That's dependent on your account, John. And everybody, FX Street just posted a link there for educational articles on scalping, so you should all really try and use that. In percentage terms, John, I mentioned at the beginning, so basically in percentage terms, I'll have a daily stop loss of 2%. And typically that might be five losing trades in a row. Yeah, so just under 0.5% a trade for me. Yep, Kevin, I mentioned earlier, the specific times are 8 to 11 UK time, and then 1 till 4 p.m. UK time. Is there any written material on the system? Yes, there is. It's something that we give to our members. There's a workbook that goes with it. I don't mind trading before the news. I won't trade a minute before the news, but I don't mind trading after the news. Thanks for the time. I better go before I pull my hair. Oh. Okay, everybody. Well, thank you very much for joining. I think we need to wrap it up now. So really appreciate it, everybody. Thank you for joining. I hope you all enjoyed this session. Go back and watch it again. And if you have any questions, then please feel free to drop us a line over at Traders Corner. Okay? So take care now. Thank you very much for watching. Have a good day and good trading to you all.